What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll look at the bear market scenario looking at weekly charts. Because we did have a very bearish week that did slice through critical support, we need to start considering the possibility of a bear market. So first up, we'll take a look at a weekly chart of the SPX, which is the S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so just starting with a zoomed out view of the SPX, we can see we're getting very close to critical support, which is our support trend line that was tested down here on the March 2020 lows. And we did test this support level for 3 other weeks and we're back down to this support level yet again. And we did slice down through that critical support right around 43.40. So 43.40 should have been a strong support level in my opinion, and we sliced right through it like a hot knife through butter, like it was not even there. So I do think we are going to revisit that level, and at this point that level will be a resistance and not a support. So the first thing I want to do is zoom in on the recent price action, and the most likely scenario if we start losing this support level is that we are getting what's called a double correction. In an Elliott wave, this is called a WXY, and this should take us down to support levels of about 3,900, or this support level to close the gap right around 4,000. Now, instead of just drawing it out like I did here, I want to do something a little different, and I want to go ahead and copy the price action that we currently had and just move it over recent price action to see what we can possibly expect, because a lot of these moves do have a lot of symmetry. So the first thing you can notice is that it does look like the last time we had this move down, which was the correction, because remember, from weekly close to weekly close, we did correct about 12%. So a 10 to 15% correction is completely normal. And once you start getting to about 20%, you're more than likely getting into a bear market scenario, which means you shouldn't be expecting to see any new all-time highs, and the market is going to go through a prolonged period of weakness. So we're defining the bear market as the potential to drop 20% from the highs and going into a multi-month period of the market trending lower, which is beyond a 3-month mark. So right now we had what looked like a 3-month correction, but now we're entering the possibility that we go into a bear market that could last all the way out through the middle of June. So the first thing you can note by the price action is it does look like we're going to start slicing down through support and then get a very impulsive bounce to retest this level right around 43.40. Remember, I told you we sliced through that level like a hot knife through butter, and I do think we will revisit that level as resistance before we go any lower, and that's exactly what this price action is telling us. So if we start to lose these support levels, you're looking for strong support at 41.50, but if we lose that level, you're going to see full-blown capitulation in that waterfall wave of selling, which is going to take us down to SPX 4,000 in a hurry, and then we should see a lot of stop losses being taken out, a lot of people liquidated out of their long positions right before a very impulsive bounce back to resistance. So the first thing you need to understand about the market is that it wants to hurt the most people possible. So when you start seeing the possibility that a lot of stop losses are below this previous low, which is right around 41.58, that does mean the market will likely go liquidate those positions, because the market loves to cause pain to the most people possible. So if you are a long-term investor and you're looking at the possibility of where you want to set your stop losses, you need to understand that there is going to be a lot of stop loss raids below 41.50 and a lot of stop loss raids below about 4,200. So that will cause the liquidation needed to get us down to this level at 4,000. But once we get to that level, I would immediately start expecting a very impulsive bounce all the way back to the 4,300s. So one of the possibilities is that we're going straight down to that support level without a bounce and then getting the very impulsive bounce to test resistance. Now, if we're going into the bear market scenario, we should see a rejection at that level and continue down lower to the 3,900s. And then from there, we could go into a deeper bear market, or we could start to reverse and start trending back into a bull market. But we're not going to look that far into the future, because most predictions that go out multiple months in the future are usually wrong, because things can change day to day and week to week. So all we know right now is that we have very bearish price action, which is very evident by the candle that we just printed last week. We were all the way up to the weekly 20 simple moving average and got rejected and closed much lower at the bottom of the candle. That is a very bearish candle, and we sliced right through critical support like it wasn't even there. So we need to start taking the scenario that we're going to much lower prices very seriously. So while we do have support right around 42.50 and 4,200, it is very likely, if the selling pressure continues, that nobody is going to be buying. And when there is a buyer strike and everybody is running for the door and panic selling, prices can get to very low prices very quickly, and that is that capitulation scenario where everybody is running for the door and nobody is willing to buy. Now also keep in mind, when everybody is selling and nobody is willing to buy, it does make the bounce off support when you finally get to the bottom very impulsive. And that's why when we were looking at that price action, it was a very quick trip from 4,000 all the way back to 43.40. So it only takes about 1 week to get there. So when we do get to about 4,000 to 3,900, you should be expecting a very strong bounce. Even though that doesn't mean we're going back into a bull market, we could still go to lower prices from there. So be prepared for that scenario where we just start slicing through support levels like a hot knife through butter on high volume selling because there's no buyers out there. And then we get a very impulsive bounce all the way back up to the 50 EMA on the weekly chart. So that's what I would be expecting. However, we still do have big tech earnings next week. And anytime you have big tech earnings, you need to be very cautious because just a few of those companies move the entire market. When you're talking about stocks like Microsoft, Apple, Amazon, and Google, those 4 stocks alone can move the entire market, especially when we're talking about the indices. So even though we could slice down through these support levels and see a very quick wave of selling down to support, there's also the possibility that we already did see too much selling, and those big tech earnings, if they do go very well, could lead to a lot of buying pressure, which means we could start bouncing off of these support levels we're currently at, or this low right around 4,200. So nothing is guaranteed in the stock market, and that's why I always suggest you follow the price action. And right now, even though the price action is bearish, we still need to lose the support level at 4,200, and we still need to lose the support level at 4,158. So there are 2 levels of support, and we'll go ahead and measure how far those are. So down to 4,200 is a 1.6% drop, and down to 4,158 is a 2.6% drop. With the VIX as elevated as it is, we can get a move of that magnitude in just a matter of 1 day, and we could actually get a magnitude of about 4 to 5% movements in the indices as the VIX reaches into the 30s. So I'm telling you, these things can happen very quickly, and we could see some massive selling in just a matter of 1 day, and then we could see a massive bounce in just a matter of 1 day as well. So expect a very volatile market going into next week. And then we do have another catalyst in the first week of May with FOMC. So these next 2 weeks are going to be very volatile, and there's going to be the opportunity to see volatile swings in both directions, because remember that volatility doesn't only work in the downward direction. You can also get very impulsive bounces in a bear market, and you can get very impulsive bounces when you get to strong support or after a stop loss raid below critical support. So there's a lot to pay attention to over the next couple of weeks, and if you don't know what to do and you don't like trading volatility, you're much better off just sitting out, waiting in cash until we get more clarity and see where the market goes from here. But there is the possibility of a lot more downside after we see that bearish price action that we just had last week. Now jumping over to the bear bull survey, we can see there is still very low percentage of bulls, with only 18.9% of the people that are now bullish. And this survey was updated on 4/20, and then we had the sell off afterwards. So I would not be surprised to see an even lower percentage of bulls after the sell off. Now keep in mind, this doesn't guarantee anything in the short term, and you can get a very bearish bear bull survey and still go lower in the short term. But in the 3 to 6 month outlook from these prices, we are more than likely going to be higher than we were when the survey was taken. So over the next 3 to 6 months, we could get out of this bear market scenario and be at much higher prices. So if you are a long-term investor, when you start to see surveys where everybody is getting bearish or going to cash, you could start to become a contrarian looking out 3 to 6 months and start loading up, knowing that in 6 months from now, you may be at higher prices, but obviously nothing is guaranteed. So pay attention to this survey and pay attention to how the sentiment is changing with price, because I do expect to see this getting overly bearish, which could lead to that impulsive bullish bounce. But then we could still continue to sell off afterward. So next we'll take a weekly look at the NASDAQ 100 NDX, and we can see the NDX is already down here at this very critical support right around 13,300. And if we lose that support level, we will be taking out the previous lows, and that will be the stop loss raid that could take us to much lower prices. So just like we did on SPX, we'll go ahead and take a look at how these candles look, and we'll go ahead and move this over here, and we could see that there is the possibility we lose that support level, get the waterfall wave of selling next week, and then get that very impulsive bounce all the way back up to about 13,800, which is a level we could get rejected at and continue lower. Now take this with a grain of salt, because there's nothing about these levels that's important. We're strictly just taking the last corrective move that we had and projecting it from the recent bounce. So while there's no guarantee we're going to these levels shown, I am showing you there's the possibility we get a massive wave of selling and then a very impulsive bounce and then a continuation of more downside, because if we are going into the bear market scenario, we are more than likely going to see prolonged weakness going through the month of June. So expect a very volatile ride, especially with all the catalysts coming up, and you do know if we lose this support level at 13,300, it is going to be a very quick trip to lower prices because all of those stop losses are going to be taken out as many people get liquidated out of their long positions. Once the market liquidates all of those long positions, it's going to have no trouble bouncing because there's going to be no buyers and a lot of cash on the sidelines, and that's what's going to cause the impulsive bounce. But remember, you need to take any impulsive price action to the upside with skepticism if we are going into a bear market, because as you can tell, lower prices could be right around the corner after we get that bounce. So expect to see a lot more downside if the NDX starts losing support at 13,300. And then once we get that liquidation event, we should see the VIX spiking to very high levels in the 30s. And then we could get a very impulsive bounce in the short term. So watch that very critical support level. And remember, we still do have a gap to fill all the way up here at 14,307. So it is possible we bounce all the way back up to fill that gap, find resistance, and then continue to trend lower from there. Or we could get the bullish breakout and start getting back over the weekly 20 simple moving average. But I would not expect that to happen. And if it does happen, then we will see it happening in the price action and we can adjust accordingly. But there is no reason to be expecting any bullish price action after we saw such a bearish price action week, with all of the price action closing at the bottom of the week after getting rejected from strong resistance. And clearly there is no buyers out there, which is not a good sign, and we need to be very cautious at this point. On the Dow Jones weekly chart, we can see that we were looking very bullish intra-week, and it started to look like we were getting a bullish breakout. And then we saw all of that quickly reverse in the last 2 days of the trading week, closing near the low and breaking down through the weekly 50 EMA. So this is no longer looking bullish on the Dow Jones. If the Dow Jones got that weekly close above 35,000, that would have looked like a bullish breakout. But as you can see, it now looks like it was just a false bullish breakout because we got rejected and saw a very quick wave of selling, closing back down below that resistance and way below the support level at 34,000. So it still looks like in the long term, the Dow Jones has been going sideways and we're still not getting the bullish breakout above 35,000. So below 35,000, it looks like we could be coming back down to retest the lows right around 33,000. And if we break out of this trading range to the downside, we are more than likely going to see the bear market. So just like the other indices, we could see that double correction in the price action, which means if we get rejected from here, we could be going much lower, get that impulsive bounce, get rejected from resistance, and continue lower into the month of June. So that's what you should be expecting until we get a bullish breakout. So in the Dow Jones, we would need to start closing back above 35,000. Otherwise, you're expecting to see the Dow Jones going for a measured move lower, all the way back down to at least 31,000. So below 33,000, you're getting risk off and you're getting very bearish in the Dow Jones. Remember though, if we do bounce off the support level at 33,000, it's still a trading range, and we could continue to bounce within this trading range until we either get the bearish breakdown below support or the bullish breakout above resistance. So follow the price action at these levels. The critical support is 33,000. You're getting more bullish above 35,000. And then we could retest the previous highs at 36,000. But right now we want to give all of the preference to the bear market scenario because we had such a bearish week of price action. On the Russell 2000 weekly chart, we also had a bearish candle and we did close below a critical support at 1960, which was a trading range that we were breaking down within in the Russell 2000 between 1960 and 2100. And we did get the bearish breakdown below support, which is going to significantly increase the chance that the Russell 2000 starts trending down towards 1700. You can see on the weekly chart, we do have the bear trend and we do have the bearish price action. So there is no reason to expect the Russell 2000 to be getting bullish anytime soon, unless it can start breaking out above 2100. But right now we have the confirmed bear breakdown in the price action. We have the confirmed bear trend on the weekly chart. So you should be expecting to see the Russell 2000 getting rejected at resistance around 1960 and continuing to trend lower down towards 1700. On the VIX, you can see where all of the spike in volatility came, with the VIX bouncing off of 20 and closing all the way up here at 28. And we moved 8 points on the VIX in just the last couple of days of the trading week, and that is extremely bearish. Anytime you see the VIX spiking all the way above 24 and closing around 28, that's going to significantly increase the probability we get that waterfall wave of panic selling. And that is exactly what I'm trying to warn you about. And I'm telling you, this is a risk off market until we get a bullish breakout. The VIX had the opportunity to close below 20 and clearly got rejected from that support level and had a very strong bounce all the way back into the very high volatility range. So you need to take this volatility seriously because it's going to be a very volatile market until the VIX gets back down below 20. And right now it looks like the VIX could be developing a bull trend on the weekly chart. So with a bull trend on the weekly chart of the VIX and the VIX trading back above 24 and likely going to attempt to break out above 30, treat the volatility with the respect that it deserves and continue to respect the possibility we slice down through critical support. On Bitcoin's weekly chart, we can see that we did get rejected from that resistance trendline, and so far we're still holding up above support at 37,000, but we are getting rejected at resistance on the weekly chart, and we do have the weekly bear trend. So right now the price action is looking bearish, plus we do have the bear trend. So on Bitcoin, I would not be getting bullish until it can close above 45,000, and it's more than likely not going to hold this support at 37,000, but we can't say for sure, so we still need to respect that support level. More than likely, what's going to happen is that Bitcoin is trending back down to test this support zone right around 30,000, and if that level fails, we'll likely see Bitcoin going all the way back down to 20K. It's way too soon to say it for sure, so we need to respect that support level and not get bullish on Bitcoin until it can close above 45,000. We have a weekly bear trend and bearish price action getting rejected at resistance, so there is no reason to be bullish on Bitcoin at this time. On the ARKK ETF, we are continuing into the bear market, which has been in a bear market for quite some time, and it's very likely ARKK is coming down to test this very strong support level at $50. But if that level fails, you're looking for a very quick sell-off as ARKK starts trending down towards $40. You can't get bullish on this ETF until it can start closing above $70, and it is a long ways away from doing so. So there's nothing about ARKK that's looking bullish. It's clearly still in a bear market, and it's very clearly going to test that very strong support at $50. And if that level breaks down, you're looking for this bear market to continue through the summer as ARKK starts trending down towards 40. So jumping back over the S&P 500, we are going to have a very important couple of weeks in the stock market as we come into very critical support levels. And if we lose those levels, you are looking for a huge wave of selling as everybody gets liquidated out of their long positions, as stop losses are triggered below critical support, and that could send us down for that next leg lower. Afterward, you're expecting a very strong bounce to retest resistance. And if we do get rejected from resistance, you're looking for a bear market that should take us all the way through June. So take this price action seriously because price action does all of the talking and price action is king. And as you know, if you follow price action, you should always know where the market is heading because price action cannot lie to you. There's going to be plenty of reasons to be skeptical about the stock market over the next few months. So wait for a bullish price action confirmation if you're trying to get bullish. And right now you should be expecting more downside until we see that bullish breakout. This was an extremely bearish week that we just had in the price action, and if you're letting the price action do all of the talking, you need to respect the fact that we lost critical support and we did it very swiftly with no buyers in sight, and anytime you see that, that is a sign of caution that we could be heading much lower. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. Even in 2008, when we were in a bear market, Bank Trade Alerts beat the market and had a very positive year. So if you're looking for more information about Bank Trade Alerts or want to subscribe, you can find out all the information in the link below. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.